From downtown Milwaukee, welcome to Money Talk with Bob Landis. Each week, professional advisors from Landis & Company Investments discuss the latest financial developments, offering timely insight and long-term perspective.
This is Money Talk for April 10th, 2026. Let's see what's happening. The Milwaukee Brewers are in town for the weekend with the Washington Nationals, and the struggling Milwaukee Bucks wind down the season with their last home game tonight. This Saturday from 10 to 3 is Doggy Day at the Deer District. They'll have entertainment, food trucks, vendors, and activities for our furry friends and their humans, all for the benefit of Winston's Wishes, which helps local pups in need. In the U.S., there's an online calendar which notes national days. Not national holidays, just national days. For example, they've proclaimed April 10th National Farm Animals Day, among others. On Saturday, we have National Submarine Day and National Cheese Fondue Day. Now, personally, I'm waiting for National Bratwurst Day, and I really hope it falls on National German Chocolate Cake Day. I'll be sure to let you know if it does. Travelers at the Philadelphia International Airport on Tuesday encountered a line so long it made the Guinness Book of World Records. But the line wasn't for a security check. 1,291 cheesesteak sandwiches were lined up for National Cheesesteak Day, besting the previous lineup of 500 of the tasty sandwiches. Now, for something a little more local, a kangaroo recently escaped his enclosure in a petting zoo in Necedah by jumping over an 8.5-foot fence and enjoyed a few days on the run. A team of volunteers with heat-seeking drones helped bring the lost marsupial home safe and sound. The zoo has now invested in some additional netting to prevent another escape. And finally, our headline of the week. Family finds possible human skull in Long Beach during an Easter egg hunt. That definitely had to put a crimp on the festivities. On the podcast today, we have Steve Giles, Kendall Bauer, and with a wrap-up of the week, here's Kyle Tetting.
Well, thanks, Jason. A very strong week overall for the markets. NASDAQ up 4.7% this week. That's 1,024 points. The S&P 500 up 3.6%. And the Dow Jones added 3% this week, despite losing 269 points on Friday, still up 1,412 on the week. For the year, including dividends, the Dow has clawed back to positive, up just 0.1% on the year. The S&P almost there, down 0.1% on the year. And the NASDAQ, after a stellar few years before, down 1.3% so far this year. Steve, hard not to be excited, I think, about at least a week in which we've finally seen some return to the up markets we'd been counting on for so long. It's been a long stretch of weeks in which we were in decline, and now all of a sudden, at least for now, some encouraging signs that maybe stocks have stabilized a bit from here.
Yeah, and for those investors that were looking at their returns for last year, wondering where they should go, I think the last month has certainly been a good reminder that it all really comes back down to asset allocation and your balance. Those asset categories last year, Kyle, that outperformed, like growth and international, for the year-to-date, growth's been being outperformed by value and fixed income. And for this last week to have at least a thumb being plugged into the holes in the dike for now, with what's going on in the Middle East, I think a lot of investors breathed a sigh of relief that this knife didn't continue to drop.
Well, and Kendall, perhaps Iran is the place we pivot to first, in that it seemed, at least early in the week, like things were not going well. We had this massive Truth Social post, I think, that really called into question how quickly was this going to escalate further. And within the span of really 48 hours, we had come back around to getting some kind of deal. Now, to be clear, it is a deal in principle. There is still lots of negotiation to happen. But it is clear that markets seem to be encouraged by the fact that perhaps this ceasefire will be enough to get to the next leg of whatever that peace deal looks like.
Yeah, I think things are still quite fragile and delicate, but nice to see the markets respond well to that announcement. And it was interesting. I think a good reminder, as we'll always like to throw in, is try to separate your political beliefs from your investing, and specifically from your retirement plan and strategy. I took 2 calls earlier in the week of clients that were very nervous coming off of some of the remarks by the administration. And we talked about both potential outcomes of if we see the conflict escalate, could it push markets down further? But also reminded them, hey, if we do get an announcement of a ceasefire, which we happen to get, we could see exactly what occurred. Stocks take back off to the upside. And so we know missing even 1 or 2 of those upside days, if you panic or let emotion take the driving, take over the steering wheel, can do serious long-term harm. So again, we try to prepare clients for these situations well in advance. Going back to what Steve just said about the balanced approach we take. But remember too that we have a plan, that you as the investor have a plan, and if you are nervous or you are feeling uncertain, to call your advisor. I mean, that's what we're here for. Very happy to see the announcement of the ceasefire, see the markets respond positive, but I don't think it's safe to say we're through the weeds yet.
Yeah, and on that note, Kendall, to remind investors that this ceasefire is, at least I feel, not something that the markets are paying as much attention to as they are the price of oil. While bombs have stopped dropping in Iran, the price of oil is still up near $100 a barrel. And what's driving corporate profits is going to be the impact that the higher cost of oil has to move freight around the country, to pay for higher jet fuel to move your product around the globe. The more people are spending on their gas tanks to fill up their cars, the less they're going to have in discretionary income at the end of the month to go to the movies, to go out to dinner, to go on vacation, and that also will have an impact on stocks. So as much as this week I think breathed a sigh of relief in that we have at least a pause on the conflict, we're far from out of the woods with respect to resolution regarding the price of oil.
Well, and it was clear in kind of the immediate aftermath of that ceasefire deal that it was those stocks most tied to the price of oil that saw some of the biggest pops, travel and leisure, and specifically the airlines, the cruise lines, where a good bit of their input cost is just so directly tied to energy. Well, yeah, of course they were going to be the biggest ones to rally. And so I think that's the part that needs to be, really solidified before we can talk about what does the next leg of the rally look like. We need some clarity on what energy prices look like. And it was interesting, on Friday we got the March CPI report, and we had already seen the impact, at least in energy prices, of that spike in oil. Annual basis, headline consumer price index up 3.3% in March. When you look at the core excluding food and energy, still up 2.6%. And so it is clear that there was a significant immediate impact on prices, largely tied to energy. And oh, by the way, a good bit of fertilizer comes through the Strait of Hormuz as well. And so food prices potentially a bit higher if this conflict were to carry on. I think you're hitting the nail on the head 100% here, Steve, and that this is going to continue to revolve around how much can oil settle into a much more normal price, because that's what's really going to weigh on the heads of consumers and inflation more broadly. And then on Friday, in addition to the CPI, we got the consumer confidence from the University of Michigan. Consumers feeling as bad as they've ever felt based on those surveys, and most importantly, pointing to inflation expectations a full percentage point higher than what we had seen the month before. And so I think, Steve, if we look at consumers, we look at the inflation numbers that are out there, I think you're spot on with oil really being the thing that's going to be driving a lot of the market movement near term.
And it becomes a negative feedback loop. The more negative consumers are about the prospects for what things will cost in the future, the worse they may become as it becomes a self-fulfilling prophecy.
I think that's fair. And Kendall, the one thing that jumped out to me in the CPI report and looking at personal spending earlier in the week, we are still seeing wage growth outpace inflation. So 3.3% headline CPI, but wage growth, average hourly earnings up 3.5% over that same time period. if you're in the job market, if you're still working, and granted, I know more of our workforce is entering those retirement years, but if you're still in the market, if you're still working, well, at least you've got a little more income coming in, so you can afford to pay for more diapers, you can afford to pay for more household goods. I know those are things you're certainly looking at in your house.
Yep, no shortage of diapers needed. Yeah, it's nice to get some good economic data coming in. Good contrast to some of the other key events going on. And that's what's interesting to me is maybe we're going to find ourselves in a similar situation to where we were a couple years ago, where sentiment, has gone down because of economic reasons or inflation reasons, yet the consumer still spends through it. And so we find ourselves in this position of people complaining but continuing to spend money. But time will tell. And that's the thing, that I think we keep a close eye on is consumer spending, given that it drives so much of the economy.
Yeah, and I think it's fair to point out that we're seeing an immense amount of wealth still out there, right? And so even when people don't feel great, or even when they're saying they don't feel great in these surveys, to your point, it has not impacted their spending all that much. We're seeing record numbers of IRAs opened. We're seeing people save despite the fact that maybe they're worried a little bit about the way the market is going right now. And so I think you put all that together, it's a pretty interesting story about how much difference there is between what we say and what we're actually doing.
I think there is a big wealth gap, and all you got to do is look at the cost of some of these World Cup prices. I have a lot of clients on fixed budgets, and for them, it really does come down to how much is the price of gas, what is the price of meat. I am a Costco member. I do shop at Costco. I love getting a good deal. Got an email from Costco that they have some single match, double match, or even 4-match ticket packages for the FIFA World Cup that's coming here to Canada, the U.S., and Mexico this summer. For $39,000, those of you that are interested can go and see a game in Seattle and New York. It's a twofer if you got $40,000 in your pocket that you just don't know what to do with. Somebody's going to spend that money, Kyle.
Does that include about $35,000 in gold with it? Because I know Costco had some extra gold bars they were trying to get rid of.
You do get a $4,000 Costco gift certificate that gets delivered to you in digital form. But the other $35,000 must go to your the price of your tickets.
Well, and of course, Landis & Company does not receive any compensation from you going out to Costco to buy those deals. So do so at your own risk, I guess. In terms of what else is in the news, the last couple of weeks, we've had a pretty meaningful conversation around SpaceX, this publicly traded space exploration company, or rather privately traded space exploration company that is looking to go public. And a lot of conversation around just what that method will look like. There have been no shortage of, I think, people over the years that have looked at a business like SpaceX. They see someone like Elon Musk and all of the development and all of the growth potential that comes in those areas, and they go, hey, I want to participate. Of course, the challenge is that getting in on an IPO, even for a supposedly $2 trillion business like SpaceX, isn't as simple as just calling up your broker and saying, hey, get me some shares, because the reality is there isn't a lot of those shares that are going to be made available. And more importantly, they're probably not going to be made available to most everyday investors. You need some pretty significant relationships with the large brokerage houses in order to get in. SpaceX may be an exception. It sounds like they're going to try to carve out some sleeves for shareholders of certain other businesses. It's yet to be seen exactly what that looks like. But Kendall, one of the things that you and I were talking about before the show was that the rules now have changed around some of the indexes and how businesses can make their way in after they go public. And so for investors who already own a publicly traded mutual fund or who own maybe the total market index, for example, they may see some of these new IPOs come to their portfolio quicker that way than they might otherwise get them just, going back to some of the old rules on how these indexes get reconstituted.
Yeah, so there may be a way in for what we'll call the average investor or somebody that's interested in getting exposure. Exactly as you said, and this may end up being one of the biggest IPOs to ever hit. It's probably going to get a ton of market attention and attraction and news coverage as we get a finalized date. probably sometime in the middle, maybe second half of the year. But it's interesting now how the rules are shifting with index inclusion and allowing faster entry to some of these newer companies that are going public. So it'll be fun to watch and maybe track some of the retail capital that flows in through that passive form of whether it's a total market index or maybe even an actively managed mutual fund versus trying to go out and buy the individual shares, which may be difficult early on.
May be difficult and may not come at a great price. Because of all of the interest early on in some of these IPOs, what we see is sometimes there is so much euphoria that we're not buying those businesses based on any true value or any true estimate of worth, but rather just, well, we want exposure and we think this is the only time we're going to get it. There may be better prices down the road. There may be better opportunities down the road if you want the stock individually. Some reasons why that probably doesn't make sense for most investors in the first place. But even then, to your point, Kendall, there's probably some ways you're going to get it in your portfolio, even if you don't want to go buy it directly. Well, with that, we enjoy doing the program for you. We'll talk to you again next week.
Thank you for listening to Money Talk with Bob Landis. If you have a financial question you want answered on next week's show, email it to moneytalk@landis.com. To keep informed throughout the week, visit our Money Talk page at landis.com.